Hi, here with Bert Hochfeld, former hedge fund manager of Jonathan Hedvat. Bert, can you tell us like the problems with Wall Street analysts, Wall Street reporting, and taking their recommendations? Or is that fine? Not the problem. Yeah.
You know, I'm a not cast the first stone kind of guy, but in this case, I'll cast a few stones, and I hope my listeners will forgive me for that. But our listeners will forgive me for that. I don't think the objective of most Wall Street analysts is to hit the ball out of the park. Okay? In fact, they're not paid enough these days. And they're certainly not paid enough issuing those kinds of recommendations. Most Wall Street analysts, even now, although it's supposedly illegal, are subsidized heavily by investment banking. With the prosecution of the early years of this decade, it's become very difficult to pay Wall Street analysts for research, and the price per share that you can get for research has plunged to a point where that business is unprofitable. Why do I start with that? Well, if you were an analyst for a Morgan Stanley or a Merrill Lynch, Bank of America, really the source of your compensation is going to be the investment banking deals that those firms are able to capture, and part of capturing it, part of the sales process is to note that they have strong research capabilities. But the research capabilities that they will have are not really there to attempt to find some dusty corner where you'll never get an investment banking fee. Most of the companies that we're talking about, just in the nature of things, that's not where they're going to get their fees from. So they tend. Now I have a situation where I'm required to cover more companies than I ever can possibly do, and I cannot spend either the time or the trouble or take the chance of being wrong to figure out how to go against the trend. In fact, I want to be the trend. I don't want to be an outlier. It is against my best business interest to be an outlier.
So if an analyst is wrong, but everyone else is wrong, it's not a big deal.
Exactly.
If an analyst is wrong and he took a chance by standing out, he can be embarrassed. But if he
worse than that, he might get sued.
Right. And if he's off, and if he's right and everyone else was wrong, he's probably going to get the same salary tomorrow anyway.
Unfortunately, that's true.
I see. So Wall Street analysts are incentivized to not be too far from the pack, and sometimes there is a underwriting relationship between the companies. You were telling me about a company that deals with server architecture, that Nutanix had a private placement, and an analyst downgraded the shares, and you didn't agree with the Wall Street report?
Well, okay, first of all, you can look, and Nutanix is not I think Nutanix has a couple of buys and a dozen sells and a couple of, a dozen holds and a couple of sells. So most people, they don't want to take the chance in forecasting that Nutanix has truly got a technological advantage, okay? That's not a good thing. The other day, Nutanix sold $500 million of convertible debt. Zero coupon. You're not going to get any interest until all that you get is your money back in 2023.
So an average investor sees that, they think, what is Nutanix doing well? They need $500 million. Maybe that's a bad sign. I mean, they could think that one person might think that. I mean,
yeah, but here's the deal. This is a private placement. It's only going to institutions. The first question the institution is going to ask is, how's your business? Okay. Why should I buy a zero coupon piece of paper? And more than that, the piece of paper, I can't convert it into the conversion. The strike price of is $50 a share. Nutanix is $31 on Friday. Why am I buying that? You know, unless you think that institutions are stupid and dumb, the answer is because they're pretty sure that business is on fire, and that while Nutanix may or may not go up while the market's correcting as it was last week, over a period of time it's going to go up enough so that I'm going to get my interest by capital appreciation, so to speak. And that's my belief. Okay. How much are we talking about in terms of dilution? 7%. People convert at 50, there'll be 7% more shares. What do you think are the chances that the people who run Nutanix are going to take that $500 million and figure out how to buy additional technologies that will, at the very least, cover the potential dilution? I'd say the odds are very high, 90%, 95%. The guy that runs Nutanix is one of the true geniuses in the IT world. I mean, Pandy is...
Dheeraj Pandey, his name?
What?
Dheeraj Pandey? I think it's his name.
I don't know what his first name is, and if I did it, I couldn't pronounce it, so... the fact of the matter is, the guy's a genius, okay? He's basically figured out the kinds of algorithms, the mirroring, okay, the virtualization that makes their product so powerful, performs so well. He knows a lot about his business. I am willing to trust him with my $500 million. Guess what? So should you.
Yeah. All right. Thanks a lot, Bert. Appreciate it.